I'm Jenica Austin. I work here at Employer Lawyer, and I'm excited to chat with everybody today and give a little educational webinar. Um, Maybe if I just hit, sorry, one moment, everyone. It's not letting me advance the slide. Now try. Oh, thank you. We love technology and we love when we have assistants that are really better at that than we are. Okay, so our goals today are to understand wage and hour laws better, especially common mistakes that employers make, and learning how to protect your business. These are the subjects we're going to cover under the agenda here. We'll do an overview, then we'll talk about overtime, misclassification, timekeeping, and tips are kind of the four big topics we'll touch on today. And we'll close it out by talking about what business owners can do to be compliant. So first off, the main wage and hour law obviously is the FLSA, the Fair Labor Standards Act. And I think almost anyone who's ever worked a job understands basically what that is. But there are also state and local variations. And because we may have people joining this webinar from other states, I'm going to not focus on Utah. I'm just going to talk about the FLSA and then mention how sometimes different things apply in different states. The key enforcement agencies are the Department of Labor, and then of course your state labor board, like we have the Utah Labor Commission here. And the cost of noncompliance, a lot of people don't think about this because we don't want to dwell on the negative, but if you are found to be out of compliance with wage and hour laws and the DOL investigates, they can do an audit. And if they find that you're out of compliance, they can fine you. So those are the penalties. And employees can file lawsuits to recover when they aren't paid correctly. And also the government can also sue directly an employer for being out of compliance. And the reputational harm is kind of like if you become known as an employer who doesn't pay people fairly, then people want to work for you. I don't know, there's kind of a lot of sort of costs that aren't necessarily monetary that we just wanted to mention there. Everybody probably knows that the standard overtime rule is time and a half for any hours over 40. There's in Utah that we follow the federal, and so many states do, but some states have sort of extra rules. One of those is California. So there's a daily overtime. If you work over a certain number of hours in one day, then you have to pay overtime for that. Whereas the federal rule is that you just look at the hours in a week, and if it's over 40, then overtime for anything over 40. So be aware of what happens in your state. I also wanted to mention company policies that forbid working overtime. Some employers mistakenly believe that they can just say, well, I told my employees they're not allowed to work overtime. So if they worked over 40, then, I don't have to pay a time and a half, but you do. So even if you have a clear policy and you've communicated it to your employees that they're not allowed to work more than 40 hours, if they end up working more than 40 hours, your recourse is not to fail to pay overtime, it's to discipline them and say, okay, if you do this again, then you may be let go. So that will incentivize them to keep their hours under 40 so they don't lose their job. But if they do work over 40, regardless of what your policy is, you have to pay overtime for any time over 40, even if it's just a minute over 40. It's pretty crazy, but true. Okay, a lot of people have questions about calculating the regular rate of pay because in order to know what your overtime is, you have to know what the employee normally makes. And so if you have just a basic hourly employee, it could be simple, but some employers use different ways of paying. And so they have to know what is included in the regular rate of pay and what is not. So this slide helps us understand that what's included is, of course, the wage or the salary, any non-discretionary bonuses, commissions, shift differentials, and piecework earnings. So those are the things that you have to consider and include when you calculate overtime. So if you have someone that works a certain number of hours and gets a bonus, but you don't factor in the bonus in the regular rate of pay, you could be found to be non-compliant in overtime, obeying the overtime law. So you have to include everything they make. And if you have an employee that gets tips, which we're going to talk about at the end, you only have to include their tips if you take the tip credit. So put that on the back burner for a second. All right, the things you don't have to include in the regular rate of pay are discretionary bonuses, gifts. Those are things like a Christmas bonus. That's a gift, right? But if it's a bonus that's tied to any kind, their performance in any way, that's non-discretionary. Reimbursements. So obviously, if they spend money on something, the company reimburses them. You don't have to include that pay. It's not really pay, it's reimbursement in the regular rate. Vacation holiday pay also not included, and profit sharing as long as it's truly discretionary. So that's just an overview of how that works. Once you know what you're including, you go to the steps of calculating, and they're pretty straightforward, but it can get a little bit tricky, especially with like commissions, because you have to look back at the period for which they earned the commissions, even though it's paid later, right? So that can get really messy, but regardless, you take all the earnings for that week, you divide the total earnings by the hours they worked, and even piecework. So like if somebody does, they get paid per project, you still need to track their hours and you still need to know how long they worked, because if they work any hours over 40, you have to calculate, take all the money they made for all their pieces that during that time and divide it by the hours that they worked so that you know what that time and a half for the extra above 40 is. Step 3, of course, multiply the answer to step 2 by 1.5. And then step 4 is just to make sure you pay the regular rate for the first 40 hours and the overtime rate for any time after. So it's not rocket science, but just depending on how your employees are paid, and making sure, the main thing is making sure you don't forget to include everything they earn, other than gifts and reimbursements and those things that we already said are excluded, and making sure that you that you pay 1.5 for everything passed. So let's go to the common mistakes people make. Failing to track hours correctly. Obviously, we're going to talk about timekeeping in just a second. So that's really basic. If you aren't tracking the hours right, then your overtime is not going to be right. Paying straight time for overtime. So a lot of people pay like 42 hours. If someone works 42 hours, they just pay them their regular rate for all 42, and they don't add on the extra 0.5 for those last 2 hours. Misapplying fluctuating work week method. We don't really have time to get into that today, but just know that that's a common mistake. Failing to pay salaried non-exempt employees overtime. Okay, so if you have an employee that you're paying a salary and you're saying, I'm going to pay you this amount every week or every month or whatever, no matter how many hours you work, but they don't actually qualify as exempt, then if they work over 40, you still have to divide how many hours they worked by their rate, how much they made by how many hours they worked, so that you can pay them extra for anything over 40. So make sure even if salary is the way you're paying, that if they're not exempt under the law, which we'll also cover in just a second, that you're paying them overtime, tracking their hours. Okay, ignoring the business bonuses and commissions in regular rate. Tons of people do this. They think, oh, they make this much an hour, so their overtime is this. Like, you've got to include everything that they're paid. Misclassifying bonuses as discretionary. That's risky, because if you try to say, oh, this is like, just because I felt like giving it to them, it's a gift. No, a bonus, if it's tied in any way to their performance, is not discretionary and needs to be included in the regular rate of pay. Okay, done with overtime. Sorry, I'm going to try to get through everything in a quick manner here. Our next topic is misclassification, and there's 2 major ways that employers can make mistakes under misclassification is when they mix up employees and independent contractors, or they don't get the exemption right on exempt versus non-exempt. So first, we're going to talk about employees versus independent contractors. There are a lot of factors, and so people tend to get a little confused when they Google this, because there's so much out there, and the factors change. Like, the law is always being updated and tweaked. And so I decided today to just talk about the IRS 3-factor test, because it's sort of one of the most basic ones. But if you want to know if you're doing it right, you probably need to ask a professional. But just to give a basic idea of how it works, if an employee, if a company has too much control over their worker, then they probably are an employee. And if they don't have much control, then they're probably an independent independent contractor. So you look at behavioral control to know, are you telling the person how they do their work, or are you just giving them this needs to be done and then letting them decide how to do it? That's sort of the behavioral question on this test. And then on the financial control, it's looking at how much you control the pay, the expenses, the tools. So if the company provides, decides what they're paid, sometimes that makes them more like an employee. But if they have some say in that, like when the contract is made, they say, okay, I'm going to get paid this much for this. That's more of like a independent contractor. Expenses, if they are responsible for their own, that's more likely that they're an independent contractor. If you reimburse them for those, then it's more likely they're an employee. If they provide their own tools, it's more likely a contractor. If you provide the tools, they're more likely employees. So it's common sense, but and you have to just kind of look at the whole picture. It's never just one factor. You can't just be like, oh, they bring their own tools, therefore they're contractors. It's you have to factor it all in. And then finally, the type of relationship it's something that's ongoing with benefits, that's, open-ended. It could go on and on. That's more like an employee. Or is it like, okay, we're going to have you do this work and then we'll reassess and see if you're going to do the next project. That's more like an independent contractor. Okay, the next big mistake of misclassification is mistakenly wanting to say that your employee is exempt when they don't qualify. So a lot of times, employers want their employees to be exempt so they don't have to worry about paying overtime, obviously, because it's a big pain, that regular rate of pay calculation. Yuck. But it's risky. If you want to say that your employee is exempt, you have to make sure that they qualify. So the two biggest things you look at to see if somebody qualifies is if they're paid a salary correctly, and that's a fixed amount, regular intervals. It has to be above a certain threshold. Right now, that's $685 a week. It was supposed to go up last year, and then it didn't because the law that was changing it was blocked. But that can change. So just keep an eye on that. If that threshold goes up, you have to make sure that you have employees that are making at least that, or they don't qualify as exempt. And then it can't be reduced based on quantity or quality of work. That just means that if they're going to get paid that same amount, whether they work fewer hours or their performance decreases for some reason or increases. That's the salary basis test. And then the duties test is, does my employee do one of the types of jobs that falls under one of the exemptions? Now, there's more exemptions than these four that I've listed on this slide. These are just to give an example. They're the main ones, but there's like, creative professional and computer professionals. Like there's different, there's more, there's highly compensated employee, so there's a few that aren't here, just so you're aware. But if you have an employee that manages a department, has the authority to hire and fire, directs at least two other employees that are full-time, they may qualify as executive. If they do, and they meet the salary basis test, then they may be exempt from overtime. Same with professional, that one's pretty specific, like they have to have, it's for like doctors, accountants, lawyers, anybody that has like an advanced degree, but it is not tied to a degree, because there's also like creative professional, but there's specific qualifications they have to meet. Administrative, this is the one that we see people get wrong the most. A lot of times people think, oh, any office worker can be exempt under the administrative exemption, but it's actually a little more complicated than that, because they have to do office work that relates to the management of the business, like the business operations, not like the services that the business provides to the client as much as like the management of the business itself. And they have to exercise discretion and independent judgment, meaning they don't have to have their decisions, approved by anybody. So they have to have quite a bit of authority, and not just any office worker is going to qualify. And outside sales is if they're regularly away from the office and selling products or services. So just make sure, if you want to say that you have an employee that's exempt, that you make sure they qualify under both the salary basis test and the duties test, and keep in mind that there are more than the four I've listed here. Okay, these are some of the mistakes people make when it comes to misclassification. Assuming that because someone's paid a salary, they're automatically exempt. So you can't just take any employee and say, oh, because I'm going to pay you on a salary basis, meaning like a certain amount per month or per week, and they get this amount for the year, like that doesn't make them exempt. They have to also meet the duties test. Relying on job titles or contracts alone. So obviously just calling someone a manager doesn't qualify them as an executive because they have to meet, have the authority to hire and fire and have people that they manage. So you can't just say, oh, I have this one IT guy who sits alone in a room and doesn't manage anybody, but because I call him the IT manager, he's exempt. No, right? Um, don't go just by the title, don't or what you call them or what you say in your contract. That doesn't automatically make them exempt. They have to meet the tests. Treating contractors like employees. Okay. So a lot of times employers will say, I want to not have to have W-2 employees because that's a pain to have to withhold the taxes from their paycheck and process the payroll. And if I make them 1099s contractors, then I can just pay them and they can pay their own taxes and I don't have to worry about it. I don't have to get them workers' comp insurance, all those things. And so they think, oh, that makes it easy for me. I'll just make everybody contractors. But then they treat them like employees. That's going to be a big red flag to the Department of Labor that they are misclassified. So if you have employees that you are calling contractors and you're paying them 1099, but you are controlling their hours, you are providing all of the tools, you are telling them exactly how to do it, whatever the job is, and you are basically the more you control what they do, which most bosses want to because it's their business and they want it to be done right, the more they're going to look like employees. And if someone complains that they've been misclassified and the DOL investigates and audits your business, then you could be fined and you could owe, it could just be unpleasant. So if you have contractors, don't treat them like employees. If you have people you want to treat like employees, just make them W-2 employees and don't try to make them contractors. Incomplete documentation, that's like a lot of, if you get audited and they're saying, okay, we want to make sure you're paying overtime to everybody, but you're saying everyone's exempt and you haven't tracked their hours, and we don't know what their duties are, like just make sure everything, in case you ever got audited, you have everything, like this is why we said this person is this is how they do that. This is, just document everything. It's always the best way. Forgetting to reevaluate over time. This is important to say, hey, we started this person out as a 1099 because they were just kind of occasionally doing work for us, but now they're pretty much full-time. They don't work for anybody else. Maybe we need to make them a W-2 employee. That's what reevaluate over time means. If the relationship has changed, you may need to change their classification. And failing to consult with an expert. So obviously, if you're in doubt, you're not required to be a legal expert. You could ask an HR professional or an employment lawyer and get some good advice. Okay, timekeeping is our second to last topic here. I started with the mistakes this time instead of the rules because I kind of want to say these are sort of the issues that we see and why it's a problem. And then we'll talk about our recommendations for good timekeeping policies and habits. So one of the mistakes that we see people making is letting employees fix their own time. So we definitely want employees to report when they've forgotten to punch in or punch out, or something's wrong with their hours, but we don't want them fixing it. It's just risky because if they add time that they didn't work, that's wage theft. And it can just if the longer it goes without being caught, like it could just result in a lot of money owed. And that's always hard to deal with on both sides. So the next mistake is rounding time improperly. The place we see this most is when someone has a timekeeping process that reports, okay, this employee worked like 5 hours and 30 minutes, right? And then when the payroll person puts it in, they say, oh, they worked 5.3, which 30 minutes isn't 0.3, it's 0.5, right? It's half of an hour. And or like 6 hours and 45 minutes, they put in like 6.45, and 4.5 is really 0.75, right, of an hour. So it sounds like it's such a small difference, but when you have a lot of employees and it's been going on for a long time, it's surprising how much that can add up in that you've underpaid your employees by more than you would imagine just hearing the way that works. So don't switch minutes to decimals wrong. Um, not tracking pre and post shift tasks. Okay, this has to do with people coming in and working on things before their shift actually starts, and so they are performing labor that needs to be compensated, and they're not logging it. So you just have to make sure that everybody knows that anytime you're working, you should be clocked in. Don't do off the clock work. That's a that should be a big rule. Don't do off the clock work. Ignoring missed punches. The sooner those can be corrected, the better, because that's when people will remember when they actually left or got there, so that it can be accurate. So don't just let those go and think, oh, we'll figure it out later. Correct them right away. Failing to keep backups. The records are just really important. Okay. These are our recommendations. First, use a reliable timekeeping system. So a lot of people just let their employees self-report, like send them an email at the end of the week. Oh, I worked this many hours. It's really best to have a timekeeping system. There's apps now that are so great. The best choice is to have one that tracks hours in real time and can generate audit trails, so that if you did get audited, it would be very easy to show the Department of Labor that you have been tracking time responsibly and accurately. Make sure you track actual time worked and not just the time that the employees were scheduled to work. It's really important that, if you give the Department of Labor, like, oh, this person worked exactly 30 hours, like no minutes, right? That's very suspicious looking because maybe they were scheduled for 30 hours, but nobody works like exactly on the dot, or at least not often, that number. So you want to make sure that they're clocking in when they start working, clocking out when they stop working, and not just, oh, she was scheduled for 8 hours that day, we'll just put 8 hours. No off the clock work. If anyone is doing off the clock work, they need to report it so they can get paid for it. If you don't want them working those hours, then it's like the overtime thing where you need to just discipline them if they're working too many hours that you don't want them to be working. You just need to say, hey, you need to keep your hours down, or we'll have to do something different here. Breaks, those are not the only thing that people get in trouble for with breaks is having employees clock out for lunch, but then they're kind of still working. So if they're doing any portion of their duties at all during that time, it needs to be paid. So a lot of people have their employees leave for lunch or go in a break room or something just so they're not working, and you know that they're not working and they're able to just eat and they're not paid for that time, and that's fine. It can be unpaid as long as they are not working at all. If they're still listening for the phones, even if no calls come in, like that's still working, if they're covering the phones. Anyway, rest breaks are paid. That's pretty common knowledge. Okay, it's important to train managers and employees. Managers need to understand exactly what counts as compensable time. They need to know that they cannot ask employees to work off the clock, and they need to know how to handle those disputes when an employee says, hey, this isn't right, and just to deal with those in a way that will not cause conflict, but also make it as accurate as possible for that employee for that pay period. Employees need to know the policies. It's good to have a handbook. If you don't have a handbook, talk to us. That way they know it's right there in the handbook what I'm supposed to do. It can also be posted around the job site, whatever you need to do to make sure employees know the policies. And reporting missed punches or time errors. That's basically like if they don't tell you that there's a problem with their time, and then it's caught later, it just can be a big mess. So encourage them to report as soon as possible. The last category is that if you're having your managers approve the time cards every week, that's the best policy, because then things that are not right will get caught. Do your own audits regularly so that you know if there's a problem, and it won't go on for months and months without someone noticing, hey, this isn't right. And keep records for at least 3 years. That's an FLSA rule. Have to keep all your timekeeping records for your employees for at least 3 years. All right. This is our last topic, guys. We're almost there. If your employees receive tips, so I know a lot of you may not have employees that receive tips, but I want to just touch on this really quick for those that do. The tip credit rule under the FLSA is what allows you to have the tips that customers are paying make up part of their minimum wage. So you're allowed to pay as little as like $2.13 and then have the rest of their pay be made up by the tips they're receiving. But if you do that, you have to provide notice. There's a bunch of requirements under that, and you have to include them when you're calculating overtime. So don't base the overtime rate on the like $3 or $4 that you're paying them the base wage. You have to include the tip credit amount as well. If an employee does tipped work for 80% or more, then they're okay to get the tip credit. But if they do more than 20% of non-tipped work, so like if they wait tables, but they also clean bathrooms, like you just have to make sure they don't clean bathrooms more than 20% of the time, because that's not tipped work. Tip pooling, we've seen people get in big trouble when they have not done tip pools correctly, because it can just add up fast how much the fine and the back wages adds up to. So it's important to make sure that only employees who customarily receive tips participate. In other words, like in a restaurant setting, bus boys, bartenders, hostesses, those people can all be part of the tip pool with the waiters, servers, but not the dishwashers and cooks, right? Because you don't usually tip your cook at a restaurant, right? And managers and owners can't participate in the tip pool either. State laws can be different than federal laws, so you need to know if your state prohibits the tip credit before you go to do that, and there may be a higher minimum wage in your state. So just keep that in mind. Okay, staying compliant. These are sort of just the takeaway tips that I think are just the biggest things, because we got into the weeds a little bit on some of those topics. So make sure you're conducting regular audits of your classifications and pay practices. So look at your employees. Is anybody exempt that shouldn't be? Is anybody a contractor who should be an employee? Are all of our pay practices, if the DOL walked in here today and looked at our pay practices, would they be happy with us? That's the idea. Train managers on wage and hour policies. So often the owner will know like what's supposed to be happening, but because the manager that actually supervises the employees isn't as knowledgeable, they tell employees wrong things, and then that can lead to mistakes and fines that the owner was like, what? I didn't think that was happening. So just make sure that the people actually supervising the employees know what they need to know to prevent errors. Update employee handbooks and timekeeping systems. If you've been doing old school style for a long time, check out the great apps that are available now for timekeeping. Update your system. There's so many good digital ways to keep time now for clock in, clock out on employees. Stay informed on legal changes. This is really important, and I know that I'm speaking to the choir here because you're right here at this webinar and here to listen to us, and we try to do our newsletters to let everybody know about legal changes that happen that affect business owners. So that's a great thing to do, but also you could just subscribe for like one of the HR kind of updates that you can get. Partner with legal or HR professionals as needed. This is important if you want any kind of an audit done so that you know where you stand. Like, we are happy to help, or any professional expert like us, an employment law or HR expert. Bring them in and just say, look, do a review, and it could just really save you a lot of money if they catch it before you get someone complaining about it. Michelle, do we have questions in the chat?
We do. Yeah. As soon as
Oh,
you're
I don't hear you. Let me see. Okay, try again.
okay, can you hear me
No.
now?
Yeah.
Okay. Yeah, we do. Have you wrapped up here on this slide?
Oh, yeah.
Awesome. Yeah, we have a few great questions, and if you have more questions, feel free to throw them in the Q&A or in the chat box, and we can get those answered. So the first one, if an employee is full-time salaried teacher but has a separate stipend contract for coaching, as an example, are they entitled to overtime?
Um, I am not sure because I know teachers can fall into sort of a separate category, different from the type of employers we usually advise. Um, I would love to look into that and get back to you. Michelle, can you tell who's asking that and we can get their email address and
Yep.
give them an answer to that? I'm sorry that I don't know the answer to that.
Yeah, of course. So Sarah, I'll follow up with you. Me and Jenica will follow up with you after the
Thank you,
webinar.
Sarah.
And then Sarah also said, do you recommend salaried employees track time even if they're exempt?
Yeah, I think it's always a good idea to know the hours that everyone's working, even if they're not going to get paid overtime, because it's just a good practice. Um, just in case you wanted to make a change, you would know exactly what hours they're working in. Just
Mhm.
the more information, the better, in my opinion.
Okay, another question. We found out we have a guy doing off the clock work. What should we do? Probably call us.
Yeah, yeah, you would try to try to figure out best guess how much the time is and compensating for that, and then um, re-educate, make sure he understands why that's a problem. And, um, I don't know, you don't have to go back forever, but as much as you can compensate him for the time that he can demonstrate he's worked off the clock, and then make sure he's clocking in for any time that he's working.
Okay, another question. Do salaried employees like CEO or COO need to keep track of their hours? Well, that's the first question, and then there's a follow-up.
Yeah, those are always exempt under the executive category, and I can understand why they don't want to, because it's a little bit tedious. It's not, they don't have to. Um, it's more like for those people like that you're trying to say are administrative, that are kind of gray area, could be exempt, could be not exempt, that you want to have their hours just in case. But
Mhm.
probably C-suite people don't really need to.
And what about independent contractors tracking their time? Do they need to?
It depends on how they're being paid, because some independent contractors are paid by the hour just because that's the contract is made that way and set up that way. So then they report the hours they worked, and that their pay is calculated that way. So yeah, it would just depend on what the arrangement is between the parties.
Mhm. Okay, so this one is about part-time employees that clock in and out. Can they still adjust their time and then be approved by managers at the end of the pay period?
Sorry, say that very first part again.
So for part-time employees that clock
Yeah.
in and out, can they still adjust their time? I'm assuming throughout the pay period, and then it's approved at the end by their
Yeah,
managers.
like if they missed a punch and then they realize it, they can definitely, communicate that to the supervisor and have it corrected. It's just always
Mhm.
best if the manager fixes it rather than the person themselves, because it's a temptation to, falsify your hours.
Mhm. Okay, let's see. Another question. An employee who was paid hourly and subject to overtime was moved to a full-time position and put on salary. Would overtime still apply if their position title hasn't changed?
If so, there's nothing wrong with paying someone who qualifies that could qualify as exempt hourly. So it would depend on if they meet the duties test and you want them to be exempt, because if their title hasn't changed and their duties haven't changed, but they were doing the kind of work that would have qualified as exempt even when you're paying them hourly, then it's okay for them to be exempt. But so I would have to look at the facts and circumstances on that one, but there
Mm-hmm.
it's always safer to pay them like they're non-exempt, even if they could qualify as exempt, if that makes sense.
Mm-hmm. Okay, these questions are just rolling in.
Oh, fun.
Let's see. So another one. If an employee can't edit their clock in, who should be the one to approve missed punches? The managers or HR? I guess
Yeah.
managers or HR.
Oh,
or
either
both?
one. It depends on how you set it up. If it becomes really burdensome to HR, then the managers can do it because they're the
Mm-hmm.
day-to-day, wheels on the ground. But if HR is able to have the bandwidth for it, that's fine too.
Mm-hmm. Okay, let's see. Another one. What if we had an ITIN employee that we had classified as a 1099 and they didn't have a way to track his hourly time? Is it bad if we have him access our time clock to track it? Like adding a 1099 to the payroll system is how I'm understanding that.
You want to put a 1099 person in just so that they can track their hours? Is that the
That's
question?
right.
I mean, it may make them look more like they're an employee. So
Mm-hmm.
in that sense, it's a risk because anytime the more control you have over the person, the less they look like an independent contractor. But again, it's that if the DOL investigated, they would look at all of the facts and circumstances of the person's employment or the arrangement between the parties. But I don't think it's wrong. I just think it would make him look more like an employee.
Mm-hmm. Open the door a little bit more.
Yeah.
Okay, that's all the questions so far. There's
Well,
any other in the next couple seconds or so.
I mean, I think we can sum up now.
Yeah.
I appreciate everybody's questions, and
Hmm.
I think that at the end of the day, we have to remind ourselves when we get frustrated with sort of the tediousness or the annoying little nitpicky rules about the FLSA or wage and hour compliance is that the reason our employees are showing up and doing the work is because they want to get paid, right? And if we remember like how important it is to anyone who's doing a job to get paid correctly, like it'll just help us keep it in perspective and be like, oh yeah, this is why we need to do this, even though it's frustrating or it's an annoying rule. The laws are there to protect people and their pay, so it's a good thing. All right. I think we can be done. Thanks, everybody.
Yeah, thank you.
Next month. I don't know what our topic is yet, but we're going to do these every month. It's going to be great.
Yes, if I didn't answer your question if these last two came in, we'll email you guys after.
Yes, we'll
Um,
follow up. Thanks,
yes.
everybody.